Hello, everyone, and welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, May 17th, 2024. Ron Quaranta here with my co-host, my dear friend, the one and only David Brill. We believe Joshua Klayman will be joining us shortly, probably from the yacht in Monaco, David. We don't know yet. We'll figure it out. And thank you, everyone, for joining us. Before we begin, our usual disclaimers, obviously, please don't consider anything to be accounting, investment, legal, or tax advice. Our opinions are our own. And anytime David or I talk about tokens, we are absolutely not endorsing any particular token. But David, good to see you. While we're waiting for Josh, crypto prices popping. It's been yet another busy week. We've got news on ETF front. Let's kick it off. Let's talk a little bit about the markets. There's a lot of regulatory stuff as well, but we got a nice rally going on. What are your thoughts?
Well, I think there are two real catalysts. One is, we've got these inflation numbers, which feel a little positive, but I will tell you from my travel to Washington, D.C. this week, I don't know what's costing less these days, because hotel rooms and flights are not two of the categories that are costing less. I mean, especially in Washington, hotel rooms are very, very expensive. But the on the ETF front in particular, with regard to the markets, we've had these 13F filings, and there are, some meaningful positions being held by large financial institutions. So we saw Millennium Management with over $2 billion worth of ETF holdings across 4 funds. And even Morgan Stanley stealthily has a little under $300 million in ETF holdings. So we're seeing some big players holding the ETF funds, and these are positive catalysts. So, again, I think the main catalyst is the inflation, but I think it's also positive seeing these large financial institutions holding meaningful positions.
And David, we haven't even gotten to the latest breaking news, which was, I think, Morgan Stanley holds something like $250 million in GBTC. We'll get to that. I want to say hello to, and I'm bringing up the old title, Josh, the mother of blockchains from back in the day, Joshua Klayman. Good to see you, my dear friend.
Great to see you too, both of you, as always.
We were talking markets, and David, you brought up some of the economic data. I'd love to peel back the layers of that just a moment, Josh, if you'll indulge us. You brought up some of the inflation data. And David, we had a pretty interesting conversation the other day with a group of people, and it is fascinating to me how people interpret economic data. And we can get into really complicated things about the personal consumption expenditures or CPI and all of this other stuff. I think the challenge you and I always see when we talk about this is, what is the trend? And I'd love your thoughts, because I think the trend is ultimately for risk on. And I think that trend is a net positive for crypto. But tell me if I'm wrong.
I think the trend is risk on, and we've seen a rebound from around 60, and now we're up to about 67 on Bitcoin. And we've seen a few alts rise too, which is nice. But, I still think this market is like a month to month, week to week, reacting to this data. I mean, I think in the crypto market, I think we're like a net positive going forward, unless we get some really ugly inflation data. And we're seeing, large institutions, as I said before, have sizable holdings in the ETF. So I think these are all net positives. I think the wirehouses still have to, flip the switch, which I think is still important. But people are, I think, generally bullish. And I don't think retail has meaningfully gotten back into it yet. And seeing the institutions get into it might move the retail folks to make, more progress on that front.
And Josh, David, one last on the markets, and there's so much more to cover. Again, we talked about some of the regulatory and some of the legislative stuff, even the breaking news from last night, and I think a bunch of us were swapping text messages. But David, I one of the things we talked about, I think it was revealed earlier this week, JP Morgan holding spot Bitcoin ETFs on behalf of clients. And I always struggle with this, given how Jamie Dimon's basically in the Warren Buffett camp of he'd get rid of crypto entirely if he could. Do you see that as kind of, disingenuous, or that's probably the wrong phrase, but why would JP Morgan be holding these if JP Morgan executive management hates these?
Well, look, if you're a big client of you're a wealth management client and you have large holdings at JP Morgan, it looks like some of their clients are saying, we want to own this and we want you to buy it for us in our, holdings. And look, we do have an approved ETF, so it's not like they're buying something on OTC. So I don't think these wealth managers who are managing these large accounts are going to say no to their clients. So that might be the disconnect between the corporate line and the actual line. Now, if we see, if we were to see JP Morgan Asset Management holding it, and not on behalf of clients, but in sort of their portfolios, individual clients, but on behalf of their portfolios, then that might get to a more interesting dynamic conversation.
But the wirehouses are coming, David, right? They're being pushed forward by those larger clients. Would you agree with that?
I do. And I think the worst case scenario for them is that, if we were to hit a new all-time high and really, gather momentum, and, these clients of these wirehouses can't access those accounts because they haven't green lighted them yet. I think that's the worst case scenario for them. So, it could be that a little bit of FOMO takes place here, and that as we go up, clients start to agitate a little more, and we may see that move. But I don't have really visibility into that. I don't think any of us do. It's sort of a bank by bank decision. But again, look, I was looking the other day. We have net inflows of over 12 billion, as of yesterday into the ETF. So there's really demand, which we've all suspected. So got to believe the wirehouses clients are, proverbially knocking on the door asking for access.
David, thanks. And for everyone in the audience, again, thank you so much for joining us. If you've got questions for our geniuses, Josh or David, please put them in chat. We will address them. Josh, let's get you in here. I'm going to rip up the script because I've been texting you about the different topics we want to talk about. I want to start in reverse order. Something the three of us have seen, it's really been talked about a lot, is SAB 121. Earlier this week, I believe it was the House passed the resolution to basically overturn SAB 121, which was the staff accounting bulletin from the SEC back in 2022 that crypto widely hated, but essentially made banks unable to hold crypto without really burdensome capital requirements. Then quickly, the Senate itself passed a bill to overturn SAB 121, and immediately the president came out and said, well, I'll veto it. Josh, weigh in on here, and I'd love your thoughts about what the vote was in the Senate and what your opinion was about that.
So I think it's a really interesting time, right? Because now this is really testing the resolve and the position of the administration, right? It was very clear from President Biden's the statement on policy about the intention to veto any kind of essential repeal of SAB 121 on the grounds that that would inhibit the SEC's ability to police, right, or to protect. That's a paraphrase. So here we have a vote where some Democrats crossed the line in terms of party lines. And so what I think this signals also with just how fast all of this has happened. Following also, I mean, I say fast, but if we think back to when SAB 121
relatively speaking.
and then the USGAO, sorry, someone's calling me. USGAO saying it was an improperly passed rule, right? I think what we're seeing is people don't like this, right? So it will be very interesting, especially in light of public statements by other potential presidential candidates saying that they are pro crypto or having some other crypto connection or another. I do think it will be interesting to see, though, even if, I mean, my prediction is that even if President Biden does in fact veto this, I don't think that, well, maybe what I'll say is this. I actually do think that certain kinds of tokenized traditional securities nonetheless may be able to proceed even if crypto writ large does not. But I think relying on that possibility, I think that's potentially challenging, right? Dangerous and case by case. I just think here the message is so clear that people don't like this, and yeah, I guess we'll see just how behind Gary Gensler the Biden administration is.
Josh, thanks. David, one of the things that really caught my eye was who on the politics aside, who voted in favor of this proposal to overturn. And the one name that immediately jumped out was Majority Leader Schumer in the Senate. Now, to me, that, we had a great conversation earlier this morning with some colleagues as well. That changes the calculus of a potential veto. It's rare, but is there a chance he doesn't veto this?
Well, it's interesting. And I was in DC this weekend, had the good fortune of being in some meetings and discussions with a number of members of Congress who are all, in favor of repealing SAB 121. And, I was in one, group meeting where Senator Gillibrand and Lummis spoke and several other representatives spoke, those being senators, and then other representatives spoke. It's very interesting. Chuck Schumer is a very political creature. So we have to think that he, had a conversation about voting in favor of repealing this before he voted on it. So, maybe the president takes another look and sees that there's, bipartisan support for this and changes his mind or changes his position. I would just say, in light of the election, this is, in my view, and I think many view, the wrong, message to get behind with the election so close, especially with something that gets passed on a bipartisan basis. It's really the wrong fight to pick, I would say, right now. And again, I don't think the commission's done a great case of showing why allowing more custodians of the ETF is detrimental to, the public and to customers. I think anything, it seems counterintuitive to what people think. So maybe the commission's going to come out with something and clarify their position on it. But I think intuitively, it doesn't seem like, it supports the mantra of protecting customers.
David, really good point. And, it is interesting, the three of us chat about this often. In the context of SAB 121, the argument against it is also that it drives participants in the crypto market away from established custodians who have the infrastructure and systems and the regulatory knowledge and capabilities to relatively keep it safe potentially compared to other providers in the ecosystem. Josh, you and I had a great conversation this morning. Shout out to our dear friend Phil Berg, who is co-chair for some of our legal working group. He had a really interesting perspective. Perhaps the president vetoes this bill as the sacrificial kind of lamb on behalf of some of the other legislation, like stablecoin bills that are coming down the road. Josh, you and I have chatted about this. Is that a possibility?
I mean, I suppose it could be. I think, it could be anything, right?
Yeah.
It really could. And I think it's also possible that, that statement about the veto was made with a belief that maybe the Senate wasn't going to pass it.
Right.
Right. I mean, I think people don't often in any area intend to be making a strong message if they think everyone else or the majority is going to go the other way.
Yeah.
Right. And so one may wonder a little bit more about whether had there been more. I mean, okay, said perhaps differently. It also could have been that message was a signal saying, don't pass this. Right. Which is right. And yet here it was passed anyway. So
yeah.
I'm going to make my rare prediction. I think it was a political miscalculation, and the president has 10 days, not including Sunday, I've read, to veto or sign. I think the SEC will withdraw SAB 121 before the 10 days are up.
Oh,
interesting.
I think they will withdraw it to avoid the veto, given the party line crossovers and kind of the kerfuffle it's generated with both parties. I don't know that there's precedent, but David, Josh, tell me I'm wrong. Tell me that's a bad prediction.
Well, if any of my crystal balls rubbing off on you, Ron, then you're in the money here. But all kidding aside, I mean, I think that would be an eloquent way of extricating themselves out of this situation. I also think that we really need to give credit to the people who've been lobbying on behalf of crypto, because it seems like they're amplifying the message of the community and getting folks who jump on board, vetoing or approving the veto of the repeal of SAB 121. So, maybe we should be giving some credit to the people who've been working in Washington to move the ball forward.
Absolutely.
I just think, like, I agree with both of you that if you were going to put your foot down on the industry with some of the legislation coming through, that this is just not the one I would veto.
Yeah.
Maybe you veto the stablecoin legislation because you don't want that to move forward. And again, I'm not advocating that, but this, just of all the legislation that's sitting out there, this is not the one I would plant the flag on.
Agreed. We're, David, you and I go back long enough to remember the McLaughlin group. I feel like we're becoming the McLaughlin group of crypto. Josh, I'd love to move to something else that caught my eye. Go ahead. I'm sorry.
So just a question. I mean, is there, I guess this is just something I'm putting out there. If I take the position for one moment that the intention was not to crush crypto, right? Or to prevent the traditional financial system and other major players from touching crypto.
Yeah.
If it were just intended to provide a disclosure that actually, some of the assets belong to other people, right? And make that clear so that there wasn't any confusion about, what was held. Is there no other way to do that? Like, I guess that's just what I'm saying. Like, just out of curiosity, if a custodian were to say, we have this much, right, that we're holding for others. Like, is there no other way to do it than having the corresponding asset and liability, in that sense? Like, is there no other disclosure that could tell the market, hey, we're a custodian?
Well, I would argue that the SEC could require those disclosures as they do for other public entities and a lot of other regulators do. I think the disclosure is distinct from the 100% liability as a capital coverage, which is just there. I could be wrong. Someone correct me. Someone in the audience correct me. I don't know another asset that a bank might hold as a custodian where they're required to hold 100% in capital reserves against the liabilities on its balance sheet.
Well, one thing about the disclosure, I think each fund will disclose who they're custodying their Bitcoin with. So everybody's going to see, in their quarterly updates, who's custodying those Bitcoin. Mm-hmm. I mean, look, somebody somewhere must have a good rationale for this. Hopefully that isn't just, anti the industry. But I think just generally speaking, I think that generally speaking, this is not helpful. Yeah. And this creates some concentration risk that I don't think anybody, would like to see. And I think, people want to see it spread out. So,
yeah. And to that point, how many custodians are we talking about? And again, all due respect to those custodians that actually are custodying spot Bitcoin ETFs, 4, 5? There's a small number of firms, and none of these are the size of a Bank of New York or JP Morgan, for example. Again, with all respect to those firms, there's a lot there. It'll be interesting to see where this goes. Depending on what happens, we may be talking about it at the next roundup next week. We will see. But I stand by my prediction, and I'm happy to wager a dinner with either of you about whether or not it happens.
I love that you made that bold prediction. I think that's fantastic.
I think enough embarrassment has happened. And again, this is not bashing the chair or the SEC writ large, but there are times and places to withdraw something you thought would work. And I think this might be one of them.
You know what? I think I will add to this, that if they do decide to, pull it, we're going to find out at like 4:30 on a Friday, Friday.
Yeah.
That they decide to pull it.
Which, by the way, will be the
Memorial
Day. Yep.
Yes, that's exactly why I said it.
Yep.
That they pull it right before Memorial Day weekend and other news stories cycle. Yep. So I'm going to add on to your prediction there, Ron. That's when I would suspect the timing of it.
David, you pick the steakhouse. We'll figure out the bet. There's lots more to cover. Josh, I wanted to come to you with one other thing, and I've been texting you about it. I'm sorry about that, but there was news recently about Tornado Cash, and I think for some of the folks in the industry, it might be, and some of the folks watching, might be worth describing what that is. And the conversation around this is destroying privacy. That's one way to look at it. But what happened with Tornado Cash?
So, for those who've been following the saga just this week, a Dutch court sentenced one of the developers to 62 months in prison, right? So that's a significant amount of time. And in connection with that, I believe that the judge said something like that there was no legitimate use for Tornado Cash,
Yep.
which I think many are looking at this and saying, "Wow, that's a harsh sentence, right? Especially for a developer, where the allegations or the statements were that that there was a facilitation of something like $2 billion of I guess laundered funds and things like that, and statements came out about I think 147 million that North Korea had laundered from hacks and things like that. I think some are looking at this, and there's a great article actually on CoinDesk right now that is touching on this topic. I will try and pull up the name when I can when I finish this thought. But one of the pieces goes to that point of, is there no legitimate reason? I think there are lots of legitimate reasons, and I think there have been some court cases, including, for example, the one that was supported by, I believe, Coinbase. There was also Coin Center, that had those litigations showing that everything from paying employees and maybe not wanting people to see your salary or other funds going to your wallet, or maybe donating to a political cause or in support of some kind of foreign aid as a private person, right? And so I mean, I think it's dangerous to take that position. I think it's also, holding aside the idea, of course there was a front end, right? So there was one could make certain arguments, right, about well, I'll just say there was a front end, but the thing is that the crimes were done by third parties, really, and an analogy that came to mind that also when I read this article was brought up was this idea of like guns, right? Is a gun manufacturer held liable because someone has a dispute and uses the gun, right?
Yeah.
And certainly there are some guardrails in place in certain instances about who can buy a gun in the first instance, but there's no, it doesn't go on forever. This sort of, a gun does not trace back to the designer of the gun.
Right. And the same way, Josh and David, join us on this conversation because I'd love your perspectives as well. And Josh, thanks for that background. To me, it's always, what is the limiting principles around what the Dutch court said? Because if you use that logic by extension, and I could be misreading it, well, then the internet writ large is responsible for bad criminal activity. How does this, David, how does this get limited? And again, we're not minimizing the requirements for need for, Josh, you mentioned it, guardrails. Yeah, we don't want bad people using these tools for bad things. But David, how do you see this? Is it a privacy attack? You're on mute, buddy.
Got very loud in the background here. I think so. I think that people should have the right not to, have all their transactions, be monitored. And, I still think this is more of a tax issue. I think there is some of the hack. I think there is like some legitimate hack issues, like these North Korean hacks, and they're probably using Tornado Cash. I still think deep down this is more of a tax issue than anything else for the third parties involved. Because again, knowing that you can track things on the blockchain much better than you could physical cash, that's my kind of view. The sentence seems really steep. I don't know why the court, the Dutch court went that way. And, considering how, Europe seems to be pretty lenient when it comes to prison sentences for a lot of other things compared to the US, this seems severely harsh. So I think hopefully we'll get some more information about why and the rationale. But I agree with both of you that there are legitimate use cases for this. And look, if I'm a professional trader, I don't want people, looking at my wallet and then determining like, oh, this guy's a whale. He's buying this. He's buying that. I'm going to try and get in front of this person and, or like front run trades or do things of that nature, or try and predict where they're going to go next and get ahead of them. So I think there are plenty of legitimate use cases for your transactions not being, visible and understood by the public.
David, Josh, I agree with you both. Go ahead, Josh.
I was just going to say, and I think this beyond just the privacy piece, which of course is huge, right?
Yep.
There's also just a lot of people in the US are watching this to say, like, what does this portend for the other developers, who, face potential sentencing or charges, in the US? And is this foreshadowing what could happen here? I think what's interesting, if I segue slightly for a moment, although
Go
happy
for
to
it.
hop back, is just, we also saw this week certain senators, Lummis and Wyden, sending a letter to Merrick Garland questioning the DOJ's approach against Tornado Cash and Samurai Wallet, right? And like in treating them as though they were unlicensed money transmitters, saying, FinCEN previously said that non-custodial crypto services shouldn't be treated as money transmitters. And one of the things that Wyden said in this, and by the way, for this, I'm also looking at a different article that says U.S. senators question Justice Department's pursuit of crypto mixers. And in this quote, Wyden says, "I'm concerned the DOJ's interpretation would treat software developers as criminals for merely writing and publishing code used by others, a dangerous precedent that contradicts decades of settled law and raises serious First Amendment concerns," Wyden said.
Yeah.
And so, yeah, I mean, I think if we think about this money transmitter, right, like unlicensed money transmitter, but then we also think about FinCEN's 311 powers that after, following the suit against following the suit against Tornado Cash, right, where they designated, which are powers, 311 powers under the Patriot Act, where they basically designated all virtual currency mixers as being of heightened money laundering concern.
Yep.
I mean, I think it's it's a lot. Maybe
There's a lot here.
It's a lot.
Josh, let me ask, when I see incidents like this and articles like this, I'm looking at it through what I'm calling the philosophic lens. And let me rip up the script here and talk a little bit about that. And I'd love your perspectives. In the world that we've seen, we've got the very far fringe of what I'll call libertarian, free Bitcoin, decentralization world. I don't think we fully live in that world. But then when I look at things like what happened with the Dutch court, when I look at, for example, regulators in the States going after the platforms that list the tokens and not the token issuers for violations of law, when I look at courts around the world going after the creators of technology, not the nefarious users of the technology, why this philosophic or cultural divide? Do you both see that, or am I overreading it?
Well, I mean, we've talked about this before, but I've always said that there's a very dimensional aspect to crypto in our space. And one is, I think the tax aspect is played down a lot. I think that's really a much bigger piece than the terrorist financing or the hacking, issue. Look, I also think that over time, crypto is, competitive to, currencies from, individual governments. And I think, sometimes these issues flare up, and I think that the governments, look at it in this big macro level and make rulings accordingly. I mean, I can say from a due process standpoint that I do find it really harmful that instead of bringing cases against individual tokens, you bring cases against the platforms, and then you do a drive-by on the token, on the token issuers or the protocols. I don't know why that's okay. And it seems very inconsistent to what's been done previously.
Josh, are David and I wrong?
So I mean, no, I think you guys are right. I agree with what you're both saying. I do think another thing, and I realize, of course, the government may have a different view from either from the industry or frankly from reality, from what we've seen with some of the reports from Chainalysis and Elliptic, right, which really have kind of right-sized the amount of activity that's nefarious and used where crypto is used. But I do think there is this tension, and I don't know the best way to address it. Um, our our personal rights, we should be careful,
Yeah.
that those aren't collateral damage. But I think it is a challenging situation. Holding aside tax for one moment, which I agree, I do believe that's much bigger of an issue than people, have been thinking about. But even if we think, okay, say we expect our government to protect us from national security risks in general. Okay. When we have, so obviously Web3 in general, there's an ethos generally of decentralization as being something good, right? And this has been further amplified, frankly, by the SEC's statements over time concerning decentralization and how you can get out of, quote, securities land. I think, though, when you have statements by Treasury from last year, which reminded us in their report that decentralization doesn't matter for purposes of obligations for KYC, AML sanctions, and things like that. And when we also have reports led by, IOSCO and others, where the SEC was the key drafter with support from CFTC, saying essentially in respect of DeFi, there's someone to hold responsible. Now, this is a little different from DeFi, right? It's a mixer. But I do think this tension of whom do you hold responsible? If people don't want it, say there are DAOs, right? And people don't want it treated like a general partnership, okay? But then they also, and I'm saying people, but it could be me as well with any of these views, or it could be none of them. But they also, there's a reaction when the CFTC in the context of UkiDAO holds liable anyone who exercised governance rights. And then in BZX DAO, in that private case, where it was deemed to be, an unincorporated association, like a general partnership, and there was a theory of negligence, right?
Mm-hmm.
Where it was joined in several liability of the token holders, the DAO members. So people were not happy with those results. So then what do you do if there is no, quote, entity? Then whom do you identify? How do you stop certain activities? And I think that's why, number one, the 311 powers of FinCEN were employed to make virtual currency mixers of heightened money laundering concern, just as a class, which is really extreme, a big thing. But then also with developers trying to figure out where to cut things off. And I think that's also, frankly, where the platforms, attacking the platforms comes in too. Because do you cut it off at the developer stage? Do you cut it off where folks have, where there's access points? I guess what I'm saying is, if regulators are trying to find choke points, they're trying in all these different ways. And I just think whatever it is, we just have to be careful that we don't, as a result, lose our most important rights and liberties.
I think, and I agree with you, Josh. I think what's happening is, I kind of call it this regulatory whack-a-mole. And the reason I say that is things like common enterprise, things like ecosystem, things like, who is responsible. Those principles are evolving in the 21st century. And I simply think, in many regards, while we know the importance of the regulation doesn't meet those needs right now, and regulation needs to evolve, and that is always a bumpy, ugly road, no matter what country you're in. David, Josh, let's move on. One last topic, and then we open it up. And again, for everyone in the audience, thank you so much for joining us. If you've got questions for us, please do let us know. David, we all know front running is bad. We've known that for many, many years. You opened this Pandora's box a bit earlier, so I'm ripping up the script. The news recently that I think it was 2 developers found an exploit, I believe, in the Ethereum blockchain, particularly associated with maximum extractable value, and made off with something like $25 million, promptly arrested, and potentially looking at 20 years each. Is front running wrong in the crypto space, David?
Ron, it's complicated.
Yes, it is.
It's complicated. Look, as a threshold matter, front running, to be clear, we all don't agree with front running.
Agreed.
So, I think we have to look for corollaries in other parts of the ecosystem outside of crypto and sort of think about it that way. But I think, like, if I think about it in the strictest sense, you know, if somebody is able to find something wrong with the technology and is able to do this, is that a crime? Have they done something wrong? Just because, they found a way to see information, before others do, and using this protocol, is that wrong? Typically, you would say confidential information, the misuse of confidential information, that has been the basis of you know,
Right.
cases brought by regulators. But I guess the question is, this wasn't confidential information that, they were given. They were able to discern this and therefore trade on discerning this. And there are other patterns in markets where people discern things that others don't, and it gives them an advantage. And that's why you hire whole research teams at banks. So it's really complicated, Ron. I mean, I think, from an ethical standpoint, you kind of get to the right answer by saying, this isn't something we support and, believe there's criminality. But I want to look at the complaint. I don't know if there's a complaint yet. I really like to read it, and I'd like to see like the basis for, the arrests. And I really like to see law enforcement's basis for it.
Josh, weigh in.
So, David, as you were describing it, I was getting shades of the Dow, right? Like thinking back to like panels.
Yep.
I guess the Dow was 2016, and then I think the absconding was maybe 2017, or maybe it was still 2016.
No, it's
I just
2016.
remember panels and stuff, people sitting on panels discussing the merits of whether this is just somebody who read the code, or whether this was something that, and we all know that ultimately resulted in the hard fork, and that, the rest is literally history. But it is a really interesting question. I mean, of course, in the case of the DAO, because of that hard fork,
Yep.
I mean, everyone essentially, at least on that one blockchain, now known as Ethereum, everyone was made whole, right, on that blockchain. So I think it is a question that's gone on for a long time. It is interesting, though, that this resulted in arrests. I don't think the DAO resulted in anything like that, if I remember correctly, and except for the DAO report, right,
Yeah.
which the SEC came out with and basically said we don't need to address certain things because the DAO is no longer in existence, right?
It's a very technical conversation, and it might even be worth a separate session. We pop up WSBA sessions often. David, to the point you made earlier, it really strikes at the idea of when we're paying excess fees to prioritize our transactions on an Ethereum public blockchain, and people have access to that public data and can kind of get ahead of it, it is a very complicated sort of case. The other side of that is these were not white hat hackers looking for a bounty. They allegedly siphoned off $25 million and shifted it overseas to overseas banks. There's almost, giving them a presumption of innocence. There's almost a sense of let's take the money and run. It will be interesting to see where that case goes, though. But lots of complicated factors. I will also be reading the complaint. If I can find it online, David, I'll share it with you as well. We're at about 20 minutes to or so. Any other comments, Josh, that you or David want to raise? Anything we should know?
I mean, I would just note that the FIT 21 legislation is in the news, and that, many are very supportive of it. Hopefully it will go to a vote next week. And as some may be aware, hopefully many are aware, one of the things that it does is it really establishes potential lines in the sand that can help say when a project is decentralized, right? Which in connection with that would be key in determining whether a digital asset were to be considered a non-security commodity.
You mean we're finally going to get a definition of sufficiently decentralized, Josh?
I mean, there is a concept. I mean, there's one of the things is like, it's really like a 20% threshold, right?
Yeah.
Like something like during the prior 12 months, neither an entity nor any affiliated persons owned in the aggregate more than like 20% of the total supply that was freely transferable. And then also looking at the authority to direct the voting in the aggregate of 20% or more. But yeah, there's a lot more. It's obviously a big comprehensive bill, but I do think, whatever one may think of a particular threshold,
Yep.
I think having something to ground that people can, rely upon would be very, very useful. And certainly Representative McHenry's been behind this bill. And so I guess we'll perhaps have an update on this next week. Right?
We'll definitely be chatting about this next week. We'll probably be addressing it, I'm certain, in our monthly policy update. Shout out to Dina Ellis and to Adam Goldberg as we get that on the calendar. And having some kind of percentage is better than having no idea at all, I guess, Josh. David, as you're sunning yourself at the Florida compound, what are you going to be doing this weekend, and what are you looking forward to in the coming week?
Well, first thing, I'm reveling my Rangers pulling out a miraculous win last night and beating the Hurricanes, so I'm quite happy about that. I'm going to be, looking into some of these issues more. And, one thing I'm wondering is, is high frequency trading any different than what these two individuals did? There's a sort of corollary there, getting the pipes closest to the exchange and being able to have the first tick. So that's one thing I'm going to be thinking about. I'll be really watching the markets too, to see if we consolidate these gains over the weekend. One thing that's been interesting, we've been sort of seeing a sell-off over the weekend, the last couple of weekends, and then buying on Sunday night into Monday. So that's one thing I'll be looking at. And, I'll be really curious to see if any news comes out about, the vote on SAB 121.
You mean
yes, I will be getting some sun in between all of that, for sure.
You mean the withdrawal of SAB 121?
Yes, the withdrawal of SAB 121.
David, sorry, one more question on that. Do you think from an Asia markets perspective that's affecting some of the market prices, particularly when we look at, Hong Kong listing, spot Bitcoin ETFs, and that really not getting the resounding applause that everyone thought it would get in Asia?
I'm going to take it in a different direction. With the Bitcoin ETFs, the prices at the end of the day, and that if there's a plus or a minus, it has to be resolved by trading on Monday. I'm just wondering if there's some savvy buying in the ETFs, sort of taking advantage of some, selling pressure or buying pressure, and buying at sort of the time most beneficial to the ETFs. So that's something I'm trying to sort out a little bit, because it's happened a couple of times now, and it sort of piqued my curiosity.
Interesting. Thank you, David. Josh, where are you jetting off to this week, and where's the Gulfstream landing?
So I need to look at my calendar for next week, but I'll be doing a lot of reading while at home. I think I do have a lot of travel coming up in the next few weeks, but I'm not sure exactly when it is, unless I'm literally looking at my calendar. I do want to just give a shout out to that article that I read.
Yeah, go for it.
Which I didn't name, it's called The Hard Truths and Worrying Consequences of the Tornado Cash Verdict. It's by Daniel Kuhn. All apologies if I have mispronounced his last name, but it's an opinion piece, and it really goes into some of the privacy aspects of the Tornado Cash.
Yeah, and shout out to the CoinDesk team. They do a good job with a lot of the research. I will be scoping out a Capital Grill location for the SAB 121 wager for the three of us. I will also be doing quite a bit of reading. We're also preparing, and Josh, you're joining us on June 5th for a wonderful public webinar for those in the audience. If you can join us, it should be already posted in LinkedIn and on Twitter as well. So you want to become a special purpose broker dealer. We will talk about the ins and outs of becoming an SPBD in the crypto space and how to register, which apparently there's no easy way to register, and no one seems to know the answer to that. Josh, I'm looking forward to digging into those answers with you and Anne-Marie Tierney, shout out, and to Adam Goldberg and others. Josh, do you want to comment on that?
I was just going to say, I'm not sure that anyone does know the ins and outs.
It might be a really short webinar. I'm not sure yet, Josh.
That's one of the things. So yeah.
I want to give one final shout out to our friend Lewis Cohen, who has made the
Yes.
move from DLX Law, and we'll be joining another one of our friends, Sam Enzer at Cahill Gordon. So
That's right.
congratulations to Lewis and his colleagues who are moving over, and to Sam and to the Cahill group.
Yeah, and also
Congratulations.
which I think is a brilliant move. I think it's really smart and a great result for them. I think also just a shout out to
Yes.
Yes.
Wilson, who is now managing partner at DLX, which will be continuing on. And I think the only other thing I would mention is just for this webinar, since you mentioned the others, I just wanted to not forget to mention also
Tiffany
Tiffany
Smith.
Smith.
Yes. Shout out to our member and friend Tiffany Smith over at Wilmer Hale. Like all of the legal working group minds, one of the brilliant ones. It's going to be a great conversation. We'll leave it there. David, Josh, as always, thank you so much. For everyone in the audience who joined us, thank you for watching. We will be back next week. If you've got questions for David or Josh and I, info@wsba.co. We'll leave it there. Have a great weekend, everybody. Bye.
Take care, everybody.